Well, good morning to you all. Tony Virtue speaking, Virtue and Partners, with our regular monthly update. And probably best to start with the budget. It's for me, it's good just to leave these things for a few days, reflect a little bit on what's really going on. Probably the key things to be aware of. Yes, there's a small surplus this year, followed by potential deficits. I think the way to look at this is that, government expenses, costs are pretty much there. The income side is something that is more problematic. If iron ore prices go up, then that'll be good for us. If the tax take goes up with net migration, that would also be positive. So I look at these things historically, and the budgeting hasn't been that great, to be honest, in the future. So just work on the basis of the here and now. For virtually everybody, they will get a tax deduction or tax reduction, should I say, from 1 July. The truth of the matter is that with bracket creep, you're only getting back the additional tax you've been paying over the last few years. That said, it will help with mortgage payments. I don't think people will go crazy and spend it. And again, it's really part of a wider picture, which is cash flow at the moment, which I think is top of mind. Probably fair to say at this stage that we may have a federal election this year, certainly by May at the latest next year. In context, the British are going to the polls in July. Obviously, we've got a presidential election in November. And as you can see from the graph, a lot of countries go into elections in the next 6 months. What does that mean? Well, again, the reality of life is that you want falling interest rates if you're the incumbent government. And every time a government's paying high interest rates, they're not investing money in hospitals, education, etc. So there's an awful lot of people that want to see interest rates down, not just mortgage holders at the moment. The interest rate cycle, well, look, it's something that, again, from my graphs, it's been the longest time we've held interest rates at a high. Normally, after 6-9 months, we drop interest rates. This has gone on for 18 months plus. So there has been an expectation in the equity markets this would move a lot earlier. The net effect of that is equity markets have already moved. And as I speak to you today, both the US and the domestic markets very close to an all-time high. One of the reasons for that, we keep talking about this Magnificent Seven, of which probably the poster child at the moment is Nvidia. You can see their share price again on the graph there. These are not capital intensive businesses. What do? They basically get a lot of their income from advertising. Basically, they're selling the data that you gave them for free. So remember that. And they have a very low variable cost base. Once you've got this established, then you run a subscription business. I'm sure you've seen your Spotify fees have gone up, your Netflix fees have gone up. It's pretty easy to incrementally increase that. The same with the Microsofts, the same with the Googles there. Each of those companies is now larger than the entire Australian stock market. And we need to take that into consideration when we're making investment decisions. Based on client demand, I am introducing sort of one of my favourite investments a month, just to show you my thinking. This month it's Goodman Group. Goodman's had a very stellar run, up 70% so far this year, at a time when the rest of the property sector has really struggled. Anybody who is owning offices in the city at the moment, it's been tough. The demographics of high interest rates, people working more from home, makes that less attractive. Goodman have done exactly the opposite, been very, very strong in warehouses. Largest customers are people like Amazon, using artificial intelligence, using great technology, robotics, and a global business based on very high levels of quality and using energy effectively. Everything you want for the future rather than the past. And you've got a first generation management in there. So exactly the things that I'm looking for. And if you look at the graph there, you can see how much better Goodman's has done compared to the property sector as a whole. That just shows you can get what we call alpha or better improvement from our real frontline companies as opposed to the index as a whole. It is important though to remember that the index is a very fair and cheap way of at least managing an index and knowing exactly the wider trends in the marketplace there. As you can see, we're coming to year end and it's going to be extremely busy. With the change in personal tax rates, it does mean there are arbitrages in June as far as getting expenses into this year of a higher tax rate than next year, etc. Superannuation contributions will go up again next year. Not enough in my point of view, but that's life. So there's a fair bit that we can do in June to improve your financial position. So we're going to be working long hours to do that. On minor matters, we've adjusted the livery in the company and a little bit of work on the website just to make it that little bit more user friendly and just using better technology to do that, but still with that personal service. So look, that's enough for today. I look forward to seeing you. We have that function down at Harbour View next Thursday. Well over 100 people coming, so it's going to be a full house. If you're not there yet but want to be, do let us know. It'll be sitting at its very best with Vivid and all lights going. It'll be a very relaxed but a good opportunity to meet your advisors and your clubs. In many cases are good friends of yours as well. So enough for today. Tony Virtue, when experience pays.